Hi, this is Jim Jubak, and welcome to my Jubak Asset Management Quick Pick video. This week's Quick Pick is Abbott Laboratories. Now, I normally don't pick a lot of medical device companies. I find the area kind of hard to keep track of. It's very, very segmented. Technology changes a lot. Ideas of what a good therapeutic is changes a lot. To keep on top of that, you really have to know the difference between, well, let's see, now for heart problems, we're doing stents as opposed to dietary therapy. It's really, really complex. What caught my eye this time is in Abbott's most recent, this is first quarter earnings report, the company did two things. One is that it raised guidance. Now, Abbott is a very, very conservative company. It almost never does this. So the fact that it did raise guidance is kind of stunning. It didn't raise it a lot. We're talking about companies going from saying, hey, guidance of $3.20 a share to $3.40 a share, and we're going to raise guidance by raising the bottom. So instead of $3.20, we think the bottom might be $3.25. So $3.25 to $3.40 as opposed to $3.20 to $3.40 doesn't seem like a lot, but given the company, it's a big deal. Second is that the company announced a big, unexpected increase in sales of its diabetes continuous glucose monitoring device. I wear one of these myself. I'm pre-diabetic and trying to keep my blood sugar under control so I don't go into being diabetic. I think it's an amazing technology. But anyway, the thing is that, so this is a device called the Freestyle Libre, and sales grew to $1.5 billion, up 22.4% year over year. Huge increase. The other major part of their business is medical devices, where sales grew 14% year over year. Now, Abbott had a big COVID testing product. Sales took a big plunge. Sales in that particular division were down about 18% year over year. We're still looking at a company that said, hey, we're going to raise guidance. We think that we've got two great legs for this company to stand on, our diabetes device and what they call arterial management devices. And they recently made an acquisition of cardiovascular systems, which makes an artery clearing device. So those are the two big things going on. So if you're looking for a medical device company that is really, I think, positioned to deal with an aging and not necessarily more healthy population, Abbott is a good choice. They pay about a 2.08% dividend. Stock is down slightly for 2024 by about 2.7%. It's down about 7.8% in the last month. So Morningstar calls this fair value. I call it, hey, a 7%, 8% decline in the last month is a good chance to buy the stock. I think a very well-managed conservative company positioned in the right place in the medical device area with two really pretty strong growing targets. So that's my take on Abbott. That's why I made it the Abbott Laboratories, ABT, not to be confused with AbbVie, the other part of the company that broke off. I'm going to add this to my Jubak Picks portfolio as soon as I can get around to doing the bookkeeping. If you like this video and found it useful, please subscribe to my YouTube channel. That way you get notification of when we do our next one. It's free. Just go to sign up. Second, if you like more of my free stuff, JubakPicks.com is my free site that has 3 portfolios, including the 12 to 18 month portfolio that I'm going to add Abbott to, plus a dividend portfolio and a 5-year portfolio, and that's free. You can subscribe. That'll give you 6 portfolios, which means that you also get an ETF portfolio and a volatility portfolio and some even longer term plays than 5 years. And that's JubakAssetManagement.com, JubakAM.com. You can find links to all those down below. You can also find a link to my free Substack called We Moved to Italy, which is pretty much self-explanatory. My wife and I moved to Italy. It's been a long-term dream. We moved in September. That's where this is coming to you from. So we started a Substack so you can follow us along. We're right now in Venice. We're going to probably move for the summer to Sicily. So follow along, see what we're up to. comment. It's free, and you can find an address to that down below too. Thanks very much for watching.